Hello, ladies and gentlemen. Welcome to today's session. Hopefully my mic is all set up, good to go. Let me just check that I'm not on mute. Okay, yeah, it should be good to go. Hello. Hi, Vincent. Hi, Bungo. This will be great. I can't wait. Well, I hope it is great. I hope it's not disappointing. Some of this stuff you've probably going to be kind of seen before, but I'm going to go through sort of my favorite reversal pattern, which you probably all know by now is the double top, double bottom pattern. I'm going to show you how you can combo it up with some indicators and how I use it generally in the market. So yeah, thanks, Bongo. Thanks for letting me know. I need to get this new stand for this mic, I think. Probably be a little bit better. But actually, I want to start off. We were doing a little bit of analysis the other day, and I want to start off by going through the sort of market and kind of what we're expecting. Dollar's taking a little bit of a downward turn here at the moment, so started to look at potential, some dollar weakness moves going into the market. Now we did get some. Let me just bring it up. So we did get some ADP non-farm employment change that came in at 278, which was above the 173 expectation. So are we getting again another increase in the jobs data? That has bumped the potential for a rate hike. I'll just get that up as well. We're going trading. Here we go. That has bumped the potential for a rate hike up to 73.8%, being priced in for the June meeting. So we've got that on June 14th. So we've seen a bit of a bump there. We've then also seen some data sort of following that. We've just had some ISM manufacturing PMI data. So we had a little bit of a mixed turn. So the 278 ADP non-farm employment change, that actually saw the dollar strengthen slightly. If I actually just bring up the hourly chart here on the dollar index, we actually started to spike up. We then kind of reversed that. Price started to come back to the downside. And then we've just had some more data out. So at 1:30, we then had unemployment claims. Unemployment was down to, well, actually it was up slightly to 232, but not anywhere near estimates. ISM manufacturing PMI then comes in at 46.9, a drop from 47.1. So we're starting to get these mixed messages again, but still labor market still looking to be fairly strong here, which is going to cause the Fed a little bit of a problem, which is why the market is pricing in another hike. So that's quite interesting at the moment. And I've just been looking to play this sort of dollar bearish sort of move today. I'm actually personally long gold at the moment. So you can just see that in here. And I ended up taking one of my sort of strategy moves in here. So I have 2 to sort of 3 strategies that I like to use when I'm trading the markets. One of them is a simple sort of supply and demand method. Let me just get a pen tool up. I just want to explain this quickly, and then we're going to go into the topic of today. So I hope you don't mind me taking some time to explain this. But essentially what I like to do is I look at sort of larger levels in the market. So let's say this is a sort of a weekly level. When price comes into that level, I like to watch how price reacts. If we get a change of trend, let's say this is the 4-hour time frame, for instance, I'll then look for price to pull back. I'll then look for sort of a break and a continuation move, which is what I'm looking at here. The second type of trade I like to look for is sort of a supply and demand trade. So you've got like a weekly level here. Again, if price consolidates, breaks out, comes back down to sort of the lows where buyers have been involved, I like to get involved there, which would have been here Reason why I didn't get long there though is because news was on my mind at that point. So I was waiting to see what the data would come out this afternoon. So I didn't get long there, unfortunately, which would have been a really good entry. And then the second is the double bottom pattern or double top pattern. So you got the weekly, let's say price comes in, and then I also like to combo that up with an RSI showing divergence for a potential reversal as well. So those are kind of like the three sort of strategies that I use. And I'm just showing you that I'm using the sort of what I like to call the type 1 strategy. I just name them type 1, type 2, type 3, just because I like to name them. But this is what I would call a type 1 entry. And I'm looking to see if price can start breaking through these highs in here. Yes, sure, Ronaldo. Yeah, I'll make it a little bit bigger for you so you'll be able to see that. Let me just move all these down and out the way. Let me know if that's a bit better. So that's what I'm going for here at the moment. Like I said, looking to sort of target highs, really. If we get to these highs, we may not, but if we do, I'll look to take a portion off a trade off there, take another portion off here, and just see how far I can go, basically. You know, if it can come all the way up here, that would be fantastic. So yeah, I'll look to take some positioning off at that point. So we'll see if that can continue to go. Obviously, we've got NFP coming up tomorrow as well, so we've got to be a little bit aware of that. Dollar's pulling back into support at the moment as well. So if we do start to see sort of a move down into here, but then buyers start coming back in for a move up to the 105, that's going to put a bit of a dampener on my gold position here. And in fact, it'll probably mean that I'm going to need to sort of start thinking of getting out around these highs in here. Okay, so like I said, if I can come up into this point, start taking a portion off, then I can look to sort of reposition myself, or waiting to see if it reverses again. So that's what I want to just touch base upon before we go into sort of the topic of today. Now, I do have a sort of whiteboard going on in here. And I'm just going to talk to you. So we're going to basically go over sort of one of my sort of strategies that I use in the market. I'm then going to try and find a couple of examples to go with that. And this was sort of one of my first sort of successful strategies for me personally when I was trading the markets. It was the one that made a lot of sense to me when I first started, and it was the one that I just kind of have had a clear thought of in my mind. What time frame do you enter? Now, this is a good question, Vincent, because it actually just depends on how clean the market is at that point. And what I mean by that is it depends on sort of one or two things. It depends on how clean the price action is on that particular time frame, because if you were trading sort of a cross pair like pound Kiwi, then, you know, 5 minute is probably not something we want to be on because of, well, we've got lots of different things going on there, but mostly as well, we've got things like spread that we've got to be aware of, and the cost to do business. So I would say your time frame is going to depend on how clean the setup looks, the spread on which the market that you're trading, and sort of where you've kind of feel most comfortable as well, because that's also a big thing. If you're not comfortable in that time frame, then there's no point trading this strategy. But I'll show you how it kind of works. It is more like a multi-time frame analysis breakdown, and then I like to add a few things into it. So we're going to kick it off, and it is very much simple double top / double bottom. Now you may think, well, that's not very exciting, and it's not. It's really not an exciting strategy at all. But I just find that it works really, really well in sort of the transition from an impulsive retracement phase, into an impulsive phase on a trend. Okay, so what I mean by that is, so I'm going to add some conditions here, obviously. So we want it to be in a sort of trending environment, so we need to see the trend clearly. We can define the trend in many different ways, which we'll kind of touch base on as well. But ultimately, I'm going to combine this with an RSI indicator as well, because what we're ultimately going to be looking for is divergence. Okay, and I think divergence is also a very powerful way of trading, whether that's using these type of indicators, or whether you're even trading sort of, you could be trading the futures market, you could be looking at cumulative delta, you could be looking at volume, divergence, things like that. And that, again, that's something that I use when I'm using my volume profile trade, and I'll look for the divergence between price and cumulative delta. But that's something way down the line that we'll talk about when we go into sort of some advanced trading techniques. But this is a really good beginner strategy that I still use today. Okay, so like I said, double top, double bottom. So we're going to just sort of explain first. You may already know what the double top and double bottom is. So if you do, I apologize for going over this again. But the double top, double bottom, really simply put, is when price retests a previous high or low. So let's say we have a level of resistance. Okay, the double top would be when price comes into the level of resistance, pulls away, comes back, breaks to the downside, and then continues lower. So what we have is sort of two peaks here. We have what we call a neckline. Okay, so the neckline just through there, right? And there's one or two ways that you can trade it. You can either trade the sort of second retest, okay, which is a little bit more riskier, but when in combination with an RSI can work really well. Or you take the break and retest of the neckline. And if you take the retest, then usually you've got a good place to put your stop losses. You got a good place to enter the market. Okay. And you've usually got a good place to target. Right. But that's just for a double top. Double bottom, you've got a similar thing. You've got support instead. Prices trending into the area. You then get a nice move like that and continuation to the upside. And again, you see this across multiple assets. You always see it across multiple time frames. Even when you're trading, so like, I have a futures trading strategy as well. When I'm trading Euro futures, that is also something that you can, I look at quite often, because we have to understand who's driving the markets at these points, right? Where you get that turning point, they usually want to add into their positions. So that's why the second sort of retest on the double bottom is quite nice, and why the double bottom and double top are sort of my favorite strategies. Okay, so this is the double bottom. Sorry guys as well, if I speak too fast, just let me know, because I can rattle on sometimes. But yeah, you got the sort of similar thing here. You've got the neckline through there as well, and then you've got the retest. Okay, so very similar thing, but just the opposite way round. Now, I like to use these most in trending conditions. What I mean by that, so if we just come up to the trend, I'm just going to do a little arrow down here. So let's say this blue is a weekly chart. Okay, I'll get to your questions in a second, guys. Weekly chart. Let's say this light blue is your 4 hour. Okay, so the places I'm focusing on are these kind of structure points, right? So let's say that's a weekly. Price is in a trend. We're making those higher highs, higher lows. Really nice. We've come into a level of support, let's say, and we're looking for a continuation. There's a big level of resistance ahead that we want to target. Maybe there's like a previous high here before that we want to target. So we're going to be looking to get long to this point. Now, in this area here, let's just to step that out. In this area here, I'd be looking at the double top, double bottom pattern. Okay, so I'll be looking for price to come down into that level, rally back up away from it, and come back into it. Okay, now this is where I'm typically looking for an entry. So let's just say instead you've got candlesticks coming down into that supporting point. Just grab that blue again. Let's just put the support down through here. So if I was to say you're coming down into that point, you get the rejection, price starts moving away. Okay, we then come back down into that point. So that's where I'm going to be starting to get interested in the market. Now, what you could do typically, if you were going to get aggressive, is you'd put your buy stop above that high, stop loss below the lows, right? That's super, super aggressive. What I like to do is combo it up with an RSI. So if the RSI, I don't know if I can move this over a little bit. Here we go. So if the RSI is underneath, okay, and the RSI is oscillating, so it's come down with it, it's dropped through, okay, the market's coming up in here, and let's say it forms a higher low, but on the wick of the candle that's come through, it's actually formed a lower low. So what we're going to be looking for is the divergence between price and the indicator. That is my favorite sort of entry style into a trended move. So like I said, if you've got a weekly upward trend, you've got the retracement phase in here. We're looking for the retracement phase to end at support, okay, in here. And we're looking for it to turn and start giving us that impulsive phase. That's when I start looking for patterns like this in order to look for that long opportunity. Okay. Now, trends, like I said, can be found in different ways. You know, I like to use what you've seen before. You've seen my strength and weakness meter. I like to use the strength and weakness meter to determine what currencies to be watching and where the trends are more likely to develop. So that's where I kind of look for that. You could look at it from a fundamental point of view as well. You know, we've got lots of fundamentals going on at the moment. You've got everything to do with sort of the US debt ceiling and stuff going on at the moment, which causes volatility, which causes the recent sort of situation we're seeing with the sort of US dollar. So, you know, there's all these kind of things that you can give yourself a little bit of a bias towards a particular market. And that's one thing you can do. I like to use support and strength and weakness. I like to use commitment of trader reports. I like to use seasonality. Okay. So for instance, I'm looking to get short Aussie yen because I know through the start of June, the yen can be quite strong. Aussie's been quite weak recently. So, you know, Aussie yen to me is a market that I want to be keeping my eyes on for a short opportunity. Okay. So that all comes down into sort of that trend situation. Does that make sense so far? I just want to get back to your messages. I like the MACD divergence. Yeah, MACD is a good one you can use as well. I was using RSI for divergence, but I was entering too early and then started using the awesome oscillator. From your experience, which one is better? It's hard to say which one's better because I think it all comes down to personal experience. Like I said, I don't use the MACD. I use the RSI. I find the RSI easier to work with. You could use a stochastic oscillator as well. But you've got to always remember that indicators are always lagging behind. So whichever one you use, you just need it to be something that's comfortable. Now, I use a RSI in this situation because it makes the strategy perform better. Okay. That's the only reason why I use the RSI indicator, is because it's enhancing the performance of a strategy. So as long as it enhances the performance of what you're doing, I would say then, yeah, go ahead and use that indicator. But it's going to also be down to personal preference, to be honest. You know, test both ways out. It's a trial and error. You know, trading's trial and error. If I was to find something that, you know, enhanced my trading further with regards to this particular strategy, you know, maybe if price was above the 200 moving average or something like that, or above a 50 moving average, and it made it, you know, X amount better, then I'd keep that in. But it's all about trial and error. You've got to test what works for you in these type of situations. Okay, and there's no right or wrong. The market is going to tell you if you're wrong. The one thing that you can control, okay, is how you enter, your risk, and how you exit the market. The market is going to do whatever the market's going to do, but the only three things you can control is how you enter, how you exit, and how much you risk on that particular market. And how much you risk is probably the biggest thing that's going to keep you in the game or not. Okay, because how many times have you heard of people, or you may have experienced it yourself, where you're on a good run, trading little micro lots maybe, and you think to yourself, well, I'm going to start upping the ante here, and I'm going to start, I want to earn more money out of this, and you take it to another level and you lose everything, right? You've got to be able to control that risk. So, I'm discussing today my favorite pattern, but it may not be something you particularly want to use. It may not be something that you particularly agree with. But this is something I know for me works. Okay. Hopefully that makes sense. Yeah, Prince Carter, risk management definitely is the one thing that takes you to another level. So yeah, I combo it up with an RSI. We look for that divergence. We've discussed that. So yeah, we can look for like different areas of how this performs. You can look for this in other opportunities as well. I would say if you're looking at it not in a trending situation and you're looking at it just from an area of support, you want to be looking more on your higher time frames for this situation to play out. But let's go and see if we can find a couple of examples. Is there any questions about the sort of strategy that you've seen here? I'm also aware I don't want to take up too much of your time, so I don't want to hang around too much on it. We can call this this is a type 3 trade setup, double bottom, double top. Get that saved so we can always refer back to it. But yeah, let's get a fresh chart up. Let's get a nice clean chart. Let's pick something that we're not particularly using at the moment. Let's go. Should we go 𝖥𝖣yian maybe? I don't know, but that might be a little bit erratic for this. Let's click all these off. Was 𝖥𝖣yian short recently? Let's have a little look. Right, now what we need to do as well, we need to add in an RSI indicator here. Sorry, oscillators, RSI. Now I keep it on 14. You can change that. You can put it to 7, have a little play around, put it to 10 even, and have a little look at that. But I'm just looking for divergences in the market, and I'm looking for those trending situations. So whether that be on a daily, weekly, monthly, 4-hour, doesn't matter. As long as there's a sort of trend being developed, then I want to be looking at the potential for a move higher. So, this is a monthly chart, right? And we can see that price is making higher highs and higher lows, right? And then price is continuing to push higher. So on this monthly time frame, we could be saying to ourselves, well, if this monthly time frame is in a upward trend, then you can be looking for a retest of these previous highs. Is there a replay feature on the platform, your platform for testing? On MetaTrader, there's a place called Strategy Tester, so you can actually map out trades and things like that. It's not that comprehensive. If you use TradingView and you're very familiar with TradingView's replay tool is probably a little bit easier to manage. But they do have what they call strategy tester, which kind of creates a dummy environment for you to practice your trading in. But it's a little bit harder to work with, I'd say, on the MetaTrader platform. But it can be useful as well. So I think you can find that. I haven't used it in a long time. Yeah, so if you go to view on your platform and you see strategy tester there, you can click on strategy tester, and I'm pretty sure it'll open up some opportunity to create a sort of dummy platform, and then it'll ask you what date to start from, things like that, and then you can take it through. There were some other platforms that I've used in the past which are quite good. There's one called Forex Tester. I believe that's Forex Tester 3 now. I think they're on. But yeah, I used to use that a lot. That's how actually I developed my type 1 entry. So yeah, I use that one a lot. But Forex Tester 3 is quite good. But I'd say if you've got TradingView, I don't know what platforms you've got, Bongo, but if you've got TradingView, that's probably the best. I don't know whether they still charge you for the replay on the lower time frames though, because I do remember, if I'm right in saying, on TradingView they let you just kind of use one time frame, but don't let you change it up whilst you're on it, which is a shame really, because that's what trading's all about. You use that top-down analysis type of view, and if you can't test using that, then it's pretty pointless. You'll have to let me know. I haven't used TradingView in a good while either. Blueberry, we're working on potentially getting onto TradingView. So until then, though, we're working with the MetaTrader platforms. So we've got our trend here on the monthly, for instance. So I'd be looking for areas for the monthly to continue that upward trend. And again, it's always about finding those levels of support and resistance. So, if we're looking left, we have a sort of strong zone coming through into this area here, I would say, right? So you've got support over here, resistance over here. You've got a lot of chopping going on through there, a little bit of support going on, support, resistance. We kind of break through, we come back, retest it on the other side. So we've found our trend. The market is in a monthly upward trend. So the way I would look at this now is, where would I see it? Now, I like to jump 2 time frames. So I don't look at the weekly for my entry. I'll be looking at the daily, and that goes the same. If I'm in the H4 trend, okay, I'm looking at the M30/M15 because they don't typically use M30 that often. Although if you were looking at institutional feeds, minute 30 is actually quite popular. But yeah, I always like to kind of jump 2 time frames below. So if I'm looking at the daily, I'm looking at H1, things like that. So that's how I like to work with this particular move. So if I was to go to the daily time frame now, we'll be able to see if price starts to form any of these type of actions, any kind of double bottom, double tops, anything that suggests that we've got a potential move here actually. So you can see that price is trending down into the level. You can see we're starting to make lower lows here. We actually have a bit of a divergence move here where you've got the price is making lower lows, and we've actually got higher lows on our RSI indicator there. And you can see once you sort of look for a potential move in here, price does start to push back to the upside. I'll be looking at sort of this area here, okay? And again, you can kind of see the lows forming in there, and that's actually still giving us that. So you've got lower lows on here, okay, slightly higher lows on our RSI, and then we get that continuation move to the upside, okay? And that's quite extreme using monthly and dailies because, for me, if you were to get long here or even down at this point, let's say you were long here as well, you're waiting for a very long time for price to come into profits. That's not something that I would particularly like to look at too often. I don't like to wait too long before looking for my trades. So that's just an example there on a higher time frame. If we were looking at this, so we've got a little bit of a trend going on here as well, where the market's making higher highs and higher lows. Again, you're going to have to try and find those key areas of entry where you'd like to be a buyer and seller from. You know, if we're in that upward trend, I like to mark out 2 levels. So you could mark out the highs and you could mark out the sort of lows where prices come from. Typically, price will move higher from one or the other, especially on a trending market. So I would be looking at potential there. So let's say, let's have a little look at what happens down here. We may or may not have an entry criteria on the hourly time frame. So let's zoom back. We'll see if we get anything in here. So again, we've got a little bit of divergence going on. You've got the price coming down in, price starts to push away, it comes back down, we get the lower low, get the higher lows on our RSI indicator, and then we could look for our entries. Now, how you enter is really key, and where your stop loss is key. So I know, Vincent, you said that you find that you get in a little bit earlier. Now, there's another thing that I like to add when I'm getting into these type of trades, and it is the ATR. Okay, so we want to go to oscillators again, average true range, and we can just put the ATR on the screen. ATR is super, super important because it's going to keep you in the game. Okay, what I mean by that is it's going to keep you in a position where you're not going to get stopped out immediately. Like, so if I was going to go long here with a stop loss just below that swing low, that's a very, very aggressive stop loss, because if price wants to, you know, naturally, sometimes what we can see is price can triple bottom. Look at this area here. If price was to triple bottom instead, right, you'd be taken out here before the move has gone. We don't want that, right? Again, you've got that divergence going through here. So I like to add ATR to my stop losses. ATR, I think, really keeps you in the game and can help you in a long-term point of view. So all I would do, so let me just actually move all these out of the way. We know our support is running through there. So I'm actually just going to take this out for a minute. Let's just say this is our supporting zone. Okay. We've got our entry criteria. We've got the double bottom pattern. We've got the higher lows on the RSI indicator, and we've got a potential for entry, right? I would enter on the first sort of strong bullish rejection candle. Okay, so let's say it's that bullish one there. I would then come to my stop loss. Now, my stop loss is, or the price from my entry to the low of that candle is 40 pips. Now, if I look at the ATR at the time, it's saying 27 pips. So I'm going to round that up to 30, and I'm going to use a 70 pip stop loss. Okay, so you want to be coming all the way down here. And the reason why I'm doing that is because we don't want to get tied into a move. Let me just move that up. I'm just trying to do it with the pips rather than actually work it out. Okay. Now, this one's quite interesting because our target levels are going to be at key swing points. So here, for instance, and here, those would be my 2 targets on this particular trade because, oh God, what did I do there? Right, there's dollar CAD. No, we're on CAD yen, weren't we? I just pressed that wrong button up there. Sorry, guys. I was trying to zoom out a little bit. But what we're looking at essentially is trading is the daily time frame. We're trading that daily trend, right? So we want to be targeting those daily swing highs again, which in this case would be back at 100 spot 58, right? So we're back at the supporting level. We're looking for an opportunity to get long. We've found our double bottom pattern. We've got all the criteria met. We've set our ATR stops. So now we just need to set our targets. Now, one thing you can do, I don't know if you know this, you can change your Fibonacci tool on MetaTrader into a risk reward tool. So if you right click on your Fibonacci, right, you're going to bring up this toolbox in here. Now I'm going to change that to yellow so we can actually see it. Levels, I'm going to change to white so we can actually see it. So what you're going to do is you're going to remove every level in here apart from the 0 and the 1. Okay, so 382, that's gone. 61.8, that's gone. You're going to change 0 into stop, and you're going to change 1 into entry. Okay, you're going to add another level, and that's going to be 2, and that's going to be 1R. I'm going to add another. We're going to go 3. That's going to be 2R. Add 4. That's going to be 3R. So if you can get around about a 3 reward to risk ratio, that's really good, right? So if we look at our entry criteria here, okay, so if I put that entry there, stop loss here, okay, we have probably around about a 2.5R. If I just zoom in so you can see that. We have about a 2.5R move up to those highs there, which is brilliant. So we'll probably have 4, just over 4R up to those previous highs. Does that make sense? So that's how you can use that in condition with your trending environment. Again, daily here is in an upward trend. So if we're looking at those areas of support and resistance, even if we went down into our 4-hour time frame and we were saying to ourselves, well, where's our support and resistance? You could say, well, you know, like I was saying the other day, you've got lots of volume going through here. There's probably a nice volume level through there. But let's say you pointed out this area as your support zone. Price has come back into it. Again, I'd be down on my 30-minute time frame there. You've got a double bottom here. It doesn't give you the RSI divergence that you're looking for, but you do get your double bottom. Price comes in, price comes back down. There's the open and closing prices. We do get that higher low on an RSI as well, though. So you may or may not want to take this one because it's a little bit riskier. But the same rules apply, you know. Entry above, entry on the first bullish candlestick. So it'd actually be this higher high, higher close candlestick. I'd apply ATRs at that time, which will probably bring you down here. And I'd be looking to target these swing highs in there. Okay. So exactly the same. Questions. Ifran, I'd mostly look trend on weekly and find entries on H4. That's perfect. That's perfect. Vincent, I use 1 ATR above or below my entry candle. Brilliant. That's good. Good. Ronaldo, I'm sorry, can you repeat the part how to use the ATR as a stop loss? Yeah, absolutely. So what you want to be looking at is, so your entry and your stop loss, I like to add the ATR onto the stop. So what I mean by that is, so wherever your low is, where you're going to be placing your stop loss. So let me bring in the whiteboard. Let's scroll down. So let's say this is your entry candle, right? You've got like a bullish pin candlestick, right? You're at support, but that's your entry candle, okay? Now, typically you would put your, just get rid of this a second. Typically you would put your buy stop order above the high of that candle, right? So that's your buy stop. Unless you're brave to go in live, but there's your buy stop order. The reason why I like using buy stops is because price has to go with your idea to get involved. So you're going to want a stop loss on that. So if in your head, you're thinking, right, I'm just going to put my stop loss at the low. So stop loss 1, I should say, is here, right? So stop loss 1, right? That's before you're using ATR. So let's say this is just the measure from your entry to the low of that candle is 20 pips, right? But you use an ATR. So on your ATR down here, right, which oscillates with price volatility, your ATR is saying, let's say 10 pips. Let's keep it super simple. What I want you to do, instead of using your stop loss 1, you're going to cross that out. You're going to move your stop loss down an extra 10 pips. Okay. So you're going to add it to the low, essentially, of where you'd put your stop loss originally. Okay. So your total now is going to be a 30 pip stop loss. The reason why is because it can help. What it does is basically it's helping you with the volatility of the market. Okay, it's going to keep you in line. So if volatility is really low, your stop can be tighter. If volatility is really high and there's lots of swings in the market, lots of movement in the market, then your stop loss is going to need to be a lot wider to help you with that. Okay, to help you with that volatility. So that's why I use an ATR. Now there's options out there to use sort of, you can use 1 times ATR. So you can add 1, you could use 3 times ATR. And if you want to be super extreme, I just use 1. But yeah, I always add it to my stop losses depending on sort of what strategy I'm looking to use. Okay. But that's definitely something you want to be doing, especially in the early days, because like I said, in that scenario, if we get the double bottom pattern, but price comes and seeks below, you're not going to get stopped out here. And if you've got a wider stop loss, let's say you stops there, you could still be in the move before price takes off. That's ultimately, I mean, I've been saved countless times by an ATR on my stop losses. So yeah, I always recommend having a look at your ATR. Does that make a bit more sense? Let me know. Hopefully it did. Cool. Right then. So that's my sort of market mastery on my favorite pattern, which is the double top, double bottom pattern. I hope you enjoyed that. There's examples absolutely everywhere. Always look for them at key support and resistance points. And yeah, it's a really nice strategy to use. Let's have a flick around some charts then, because I'm interested to see what's going on. I missed the euro pound move, unfortunately. We were talking about getting short down to 85.75, and I've missed out on that move. I missed twice on a move down. I like to look for a sort of trend line break strategy as well. And yeah, I could have entered a couple of times, although the problem with that one, that was at 3 o'clock in the morning, so I weren't there for that one. But this one was at 2 p.m, so I could have took this one yesterday. And again, 18 pips, you're probably looking at sort of like a 30 pip stop loss on that one, but your target was down towards 50 pips. So yeah, it would have been a nice trade there, but unfortunately didn't manage to catch any of those. What else have we been looking at? Obviously dollar index coming in lower, so we've been looking at that sort of gold long situation, which is playing out a little bit. Let's have a look at cable, because cable's actually rebounded quite aggressively, hasn't it? Cable was a really interesting one. We were talking about this a little bit yesterday. I wasn't fully convinced that price was going to move higher. And then I saw this sort of breakout. It came back down into these lows here. It rallied back out, and then we had a bit of a shallow pullback overnight. So in the Asia session and the overnight session, we had this really shallow pullback. So I was thinking, that's quite interesting to see. So I did mark that up a little bit. Again, if you actually mark out the support and resistance and you go down to sort of like a 5-minute time frame, look at that spike into there. You've also got a bit of a head and shoulders pattern going on before price broke out, because I was very tempted to go long here. But we were very, very close back into these highs. So I left it, and I've missed out on an 85 pip move to the upside there. So that's fun. But yeah, we'll see how cable continues to play out. Are there times of the day that you look for a trade setup? Again, that's going to, it's based on what you're trading at the time. If I'm trading Euro futures, I'm looking either sort of around the European Open, or, I'm looking at the US Open. If I'm trading the ES, I'm looking at trading the US. So that's sort of 2 p.m. here to 6 p.m. But that just, again, it depends what I'm looking to trade on those particular days. If I'm mainly focused in FX at the time, I'll be looking to sort of swing trading, isn't it? Because I'll be holding them for hours to maybe a day. I don't really like holding things for too long. So yeah, I would say look at when price comes into your support and resistance levels mainly. Dollar yen short. Let's have a look at dollar yen. Okay, there's a potential. The problem is I really like the 142 handle. We just didn't get there. Came into about 141, didn't we? And price has reversed. Potentially, there's still potential for dollar yen to move lower. We're coming into this sort of area here at the moment. Again, I'd be expecting some volume to be through at this level here because it was a consolidation before a breakout. So we may see some kind of buying coming back in through at this level. But yeah, would a short around here? Probably not. Probably not. Probably waiting for it to, come back up to the highs here, or even 142. Because we've still got an FP to play tomorrow. We've got an FP to play tomorrow, and I think if they come out big, then the dollar might strengthen once again. Let's go and have a look at euro. Euro coming in higher as well. Yeah, I did say that there was potential for a bit of a pullback. I mean, dollar CAD's quite interesting. Look at that. CAD strength in the market. Really, really strong. Very aggressive move to the downside here. I know we had some, was it CAD data out? No, sorry, it was yesterday. GDP data. Canada showed growth up to, well, say growth. It was neutral at 0%, but it wasn't negative. So, CAD has strengthened. Again, look at that. That's probably a nice double top move in there, although it's a lower high anyway. But yeah, look at that aggressive CAD at the moment. CAD could be the one to watch. I think Kiwi CAD was something that people were looking at. Maybe a potential there. It's not a market I trade too often, to be honest. Kiwi CAD. Let's put the S&P. S&P surging as well. AJ moving the other way, yeah. Yeah, I was looking for Aussie yen shorts as well, but don't think that's the play at the moment. Yeah, we're starting to see quite an aggressive move there as well. Especially if you're seeing stocks rally, that's going to be more of a risk-on environment, and yen gets absolutely smashed in a risk-on environment. That's unfortunate because I do still like Aussie yen shorts. Just might be a little bit early to the move here for anything to kind of, aggressively move. Seasonality still shows that yen gets strong over June, so I'm still looking for that seasonal play. But we'll have to see how that plays out. Yeah, you got CAD yen. Where's pound yen? I bet pound yen's doing quite good. Yeah, pound yen could still move into that area, although still seems a bit choppy up here, pound yen. It's kind of chopping its way up to the upside. There's no real kind of clean move there on pound yen, unfortunately. So yeah, we'll have to wait and see on that one. Right then, guys, I'm gonna leave it there. Thanks for joining me for the session. Little market overview at the end. But hopefully you enjoyed the strategy setup. Hopefully something that, if you're struggling with your trade, and it might help you settle into something. It's not the best strategy in the world, don't get me wrong, but it is something that was one of my first that helped me become profitable. So stick with it. It's a good strategy to use, and yeah, hopefully it can help you as well in your trading setup. Right, guys, I'm gonna leave it there. Hope you have a good rest of your day. And I will speak to you probably next week now. Cheers, guys.